What perfect timing. The perfect scene of the clip ends and I come on the mic. All right, let's begin tonight, folks. Tonight is Tips on Management. I have to be honest, I haven't really done one of these at DTS, like a little management thing like this. And I went and pulled back all my notes, and I have 3 hours of material without even getting into stuff, just talking about the topics. Maybe not 3 hours, but I have way too much stuff to even talk about. And I want to be clear kind of what the purpose is for tonight, so you are not disappointed or you don't miss it, I guess both ways. Tips for management. That's the slide that you saw advertised, and that doesn't really say a whole lot, so let's just go to the next slide there. The purpose for tonight is to a large extent going to be awareness. This, I'm going to come back to this slide, but what's on that prior slide was on this side, is really something that should catch your eye. Anyone who really wants to can learn to read a chart with plenty of precision to make money. That's, I think, just a fact. That's a statement. Some of you may not be there yet. Some of you may not believe it, whatever, but that's just a fact. If you really want to, anybody can learn to do that. Anybody can. It really, truly only requires the mentality of about a fifth grader. I mean, there's nothing rocket science about it. It's just a matter of getting it, learning it, doing it. The problem comes in following what you're supposed to do, and that's the topic of management. That's why this next part of this says, if you, where's my red ball? If you make money with that knowledge depends on your management. Eventually all traders succeed or fail based on their management. That's my quote, nobody else's. Eventually everybody succeeds or fails based on their management. That's just what it comes down to. There's an edge in trading, but it's like any edge that you have. It's a slim edge. It's a slight edge. It's not something like you have a 90% edge and you can just goof up all you want to and be okay. You have to very carefully handle everything that you do. Backwards. The goal of tonight, awareness. Think of AA, Alcoholics Anonymous. Their number one step is to admit you have a problem, or in trading, I'd say to understand that you have a problem. I really got a hard dose again of reality that really, it was good timing for me to do this because sometimes I kind of get ahead of myself, and I think sometimes when I'm talking to groups of people that I'm talking down too much. In other words, okay, everybody knows this. And more I get reminded, no, that's not the case. I've just been doing this for a long time. Some of it's second nature to me. I don't know if some of you saw, but I think everybody at this point, we cycled through and got a email to everybody asking you that if you wanted to meet with me for 20 minutes as a little coaching session, sign up, just free. And naturally, if you guys are members of the seminar program, you don't have to do that because you have unlimited access to me all you want. So there have been several people take me up on that, and it's also on the top of the free stuff page. If you look there, it's the same link that you got in your email. And as I've gone through, and anybody who's met with me, don't, I'm not going to name names, and don't think I'm talking about you because an amazing number of people are just kind of the same. A lot of similar issues, and the common topic. And again, these are for people who've maybe know me, been following me, but not taken a class with me, or at least not in the last decade. And the common theme was always, I'm trying to take trades long-term, short-term, and they just like go the opposite way the minute I get in, and it can't be this tough, and what am I doing wrong? But the other thing that happened a lot was, most people, asked me to look at some trades, and I have to tell you, I was absolutely positively shocked at some of them. And again, nobody, get mad at me, you know it, but there were some trades, and no one person, but several times, where somebody sends me, the trade, and they give me the numbers, and I'm looking at the chart, and they tell me that they're trading the stock, and the stock had maybe gapped up a little or something, and whatever they did, they look and I go, well, I really like this play this guy did. Like I would have been long here too. They tell me the entry. I go, oh my gosh, that is an entry that I would envy over. I mean, it was a perfect entry. And I'm thinking, holy cow, this guy's sending me a trade, and he's just bragging because he made like a whole week's salary. And the stock goes, all the way off the chart. Just the absolute perfect trade, the perfect setup, perfect entry. The stock goes more than you would ever expect it to go, and guess what he made? And I say he, she, this is actually a few people. Same similar incident. What did they make? Yeah, nothing. No, nothing. They stopped out for a loss. They stopped out for a loss. How do you do that? And these people are coming in for a little free session with me, and I'm saying stuff to them like, I literally said this, how will you ever make money if you took a loss on it? What has to happen on the chart? What has to happen for you to actually put money in your pocket if you lost money on that? It's not going to happen, right? You have to really step back and think what you're doing. And the reason I bring this up because it reminds me just how basic the flaws get sometimes. Because once people get damaged and they're doing it wrong, it just gets worse and worse and worse. It's like you're digging a hole, and all the things that make you do bad stuff make you more of that bad mental attitude and make you do more of the wrong stuff again. So I just get reminded that some of the stuff that I wonder if it's worth it to sit here and talk for an hour about, it is worth it. And here's the bad thing, and this is the really, really bad thing. A couple of these people who had this trade I'm talking about right here, this one here where they lost money, when I brought it up in front of them and I said, wow, what a great trade that was. That really went great. And they look at you and go, oh yeah, boy, that really worked well, didn't it? Oh yeah, that really, what does that tell you right there? And this is, to me, the more serious part of the problem, because that comment means you'll never succeed. They said, in other words, they didn't even know the trade was a home run. What does that tell me about them? I mean, not personality wise, what does that tell me about their procedure, their method? Several people had the same issue, where they had a good trade and they made zero money on it. And I'm saying a couple of these people didn't even know what a great trade it was. In other words, they were shocked when I showed them the chart. What does that mean? Yeah, it means that they didn't even look afterwards. You understand what I'm saying? It means that they took the trade, they stopped out, and they moved on to the next trade, moved on to the next day, moved on with life. I don't care how you've learned, or what you're doing, you will never ever succeed at this if that's what you do. See, the whole secret to this, the whole concept, there's gold in all of your trades that you take, especially the bad ones. That's what you learn from. That's what you go back and you say, and that's what tonight is going to be about indirectly, sort of. But once you learn what to do, there is no one size fit all things, especially for management. I'll explain why. There is no universal management plan. It doesn't work that way because we take different trades, we take different entries, we have different personalities, and you have to kind of find the glove that fits, so to speak. And you can never do that when you don't ever go back and look at what you did in the past, right? Yeah, right, Ella. They didn't review at all. As a matter of fact, not review. They never even finished looking at the chart. Once they stopped out, they just moved on. And I don't even know how you can do that. It was just always my instinct, my gut, from the first day I started trading. And it was just me. And apparently everybody isn't like this. But when I took a trade, I had to, you know, after the fact, analyze it, go through it. What did I do? Was it right? Was it wrong? What could I have done? Because I didn't have a whole lot of training, so to speak. Even the training I had was fairly rudimentary, and I knew that I had to improve. I had to continue to follow up on the stuff for myself. So it's just amazing to me that that happens. Let's move on because I have so much stuff to go over here. Back to the slides here. Self-evaluation critical. That's the reason I told that story, to kind of get you that. And choices, you'll understand what that means in just a minute here. Why is management so tough? Let me tell you why it's tough. Me, Paul, I am still learning this. I stink in management. How's that? How's that for another introductory comment for you? I stink in management. I'm probably better than the average person listening to me by a lot, but you're never going to be perfect at management. See, we can kind of boil a chart down to an entry within a penny, right? I mean, it's literally what I do. I mean, it may not end up being right, or it may not be the right penny, but we can analyze an entry down to a penny. And the same thing with the stop. Do you understand what I'm saying, everybody? I'm not saying it's always right, but I'm saying in our minds, we have the ability, the plan, the setup, the strategy, that I can say, that's my entry, that's my stop, and I can call it to the penny. You all agree with that? Just that precision exists theoretically with the entry. Where's the target? God only knows. Where's the target? Even when you're good, the target is who knows? We really don't know. The precision on the target, we're like, shooting a rifle for the entry and the stop, and then we're throwing a hand grenade for the target. The target is anywhere up there. We don't have a clue where it is most of the time, right? And that's why a big thing that I do when I teach is discuss the fact that we de-emphasize finding exact targets, and we emphasize finding areas, zip codes I call them. And then we emphasize incremental management as we approach the zip codes. It may not make sense to you, but I think it does at some level. It should make some sense to you. One thing that you have to accomplish as part of your technical analysis is to know the zip code, and that's where some people go wrong. They have a trade that has let's say a day trade has the potential to run, 80 cents intraday, and they target 12 cents. That doesn't mean it's necessarily a bad plan. It's nice to take the easy 12 cents out if you're making money doing that. But perhaps it is the case that they needed to take 50 cents and they're only taking 12, or they didn't know where the zip code even was for the target. So another little introductory thing I want to say is that this is such a big topic, as it should be, as I'm explaining to you now, that of the three main classes I teach as part of the seminar program, there's an entire class dedicated to this. Now, in that class, I consider management to be three parts: management of the entry, management of the stop, and management of the target. Most people only think of the third one, management to the target. And that is what I'm going to be discussing tonight, because that is the most psychological one, if you will. Getting from point A to point B, getting from that entry to the target. How do you get there? Why is it so difficult? Why do people struggle with it? That's what I want to go into tonight. I'm not going to have the answers for you tonight, per se, number one, because number one, I don't have the answers yet myself. I have a lot of great guidelines for people, but a lot of the stuff is stuff that gets way, way more involved. My goal tonight is to really bring to your attention all the things that you can do and to realize how much of a problem you may or may not be having. I've seen so many people who want to change their strategies or change what they trade, go from stocks to Forex to futures or whatever, when there's nothing wrong with what they're doing. Their management stinks. It doesn't matter. If you can't trade a chart, it doesn't matter if you trade Forex, stocks, or futures, right? That's one of those things that always boggles my mind. People switching from one instrument to another because they're not successful. I get it. If you start a job and you want to trade Forex before you go to work, you have to trade Forex. I get that. I get it. If you're trading with $3,000, you have to trade futures because that's the only account you can have. I get that. But if you're not successful and you have an account and you decide to change because you think one's easier than the other, you're kidding yourself. That's not the way it works. It's all the same chart. None of it matters. I know of course there's differences between pips and cents and all that good stuff and when they trade, but nothing is different on the chart. It's all the same. Futures, Forex, stocks, all the same thing. If you can't trade one, you can't trade another. There are, let me follow up on that just a little bit. The first class that I do involves learning, it's called Mastering Technical Analysis, and it involves what I call the whole day is harder rules that you have in trading. It's what you are allowed to do, what you never do, and we talk about what prices always do. It's an absolute class, and there are no exceptions to it. Naturally, there's interpretation, but there are no exceptions. The management class is very different. The management class is where we learn all kinds of tools. And by the way, as again, we're talking about managing tonight, the psychological part of managing from a target, from an entry to a target. The other two parts to me are some of the biggest money-making things you can learn. Managing entries, managing stops. To me, that is an area where you can make the biggest improvement in your trading in general. They're less psychological things. Today, what I want to focus on is that getting from point A to point B, why it's so tough and why it happens that way. So let's go to the next slide here. These are all they're blurbs. This is a different presentation. They're all kind of little frame blurbs, if you will. I don't know if it made sense to do it that way or not. I did. Let's go on to a couple topics here to introduce some of the problems. And this one here you may have seen. Sally sends you a trading summary for the day. Trade 1, trade 2, trade 3, trade 4, trade 5, boom. There's her total. Any advice for Sally? Take a minute and go ahead and give me some comments. Any advice for Sally? Do 4 trades. Hey Cosmo. Either let your winners play out or stop blowing your stops. Not enough info. Stop trading by 10:30. Well, maybe trade 5 was done at 10 o'clock. We don't know what time it was. Don't know how she did what she did. Set up loss limit on subsequent trades. Okay, so we got some different answers here. They're good answers. Maybe some of you are zooming in on that she should set up a loss limit of what, $100 or something, right? Because if she had a loss limit of $100, then she'd have plus 450 minus 100. She'd be, is that correct math? Would she be plus 350 if she had a loss limit of $100? Is that the right math? When she's nicely positive, do not lose more than 50. Okay, so Ella brings up really an excellent point. Ella is saying, let's have some kind of if this is a day trader, let's have a day management plan, a plan to manage the money, so that when we're up X amount, we don't get back more than X amount. That's an excellent answer. That could be one of the answers here. Let's go back to the other one though. Stop trading with the circle, because that's the same thing. Is this the right math? If you were to say back to her, do you guys agree with this concept? If you were to say back to, because some of you suggested this, I'm trying to put words on it since you have to type and I can talk. If we were to say to her, hey, Sally, limit your losses to $100, you would have made $350 today. Is that a true statement? If Sally would have limited her max loss to $100, would she have made $350 that day? Is that true or not? Eric, you're a little too smart. I have done this before in a presentation. It may have even been in the highlight film. I'm not sure. Right, and this is eye-opening to a lot of people if you haven't done that. That is not necessarily true, right? In other words, what if this trade was down 150 before it made a winner? What if they were all down 150 before she made them winners? She would actually end up down $500. Does everybody see that if you didn't see it before? Does everybody see that? Telling her to limit her losses without more information could make her 10 times a bigger loser. Do you see that, guys, if you didn't? In other words, we don't know how she arrived at her winners. Maybe she had to go down $500 on every trade to come back to be a winner. So I'm not saying it's good trading. I'm just saying that we can't blindly look. And this is one of the things people do when we talk about management. You know, they look at their records and they just look at the records. You can't just look at your records. You can't just look at a sheet, an Excel sheet or a tracking sheet, and draw the proper conclusions because you don't know how you got to the numbers. Does that make sense? That's the first thing I want to bring up, that it requires an analysis on the chart to say, and the analysis needs to be done. I'm not knocking the analysis. I'm just saying that in order to maintain this profit, how much of a stop loss did she need? And of course, it's not just really over 3 or 5 trades. It's over a series of trades, a bunch of trades. On average, what do you have to do? So it could be the case. Now, this is frequently what you see. The other thing is we don't even know. Some of you said she blew her stop loss. Well, we don't necessarily know that, right? This is what you typically see from a newer trader. They maybe have a $100 risk amount, and they make 2 R's, right? Twice the risk amount here, and they make 1.5, a half. That's great, and then they blow everything out on one trade because they don't get out of a stop because they just can't take the loss, right? That's the typical for a new person to do, correct? And that typically does not go on long. Why does that not go on long? If your risk was $100 and you did this every day, why am I saying that that will not go on for long and you don't even really need help to fix that? Why is that? Right, it's a punch in the face every day, right? It's a punch in the face. It's like having a 30-pound goiter hanging off your neck and you're saying, I don't see it there. You can't avoid it. I'm not saying nobody fixes it, but at least they know what the problem is, right? Yeah, Roger's got the right one there too, right? Let's go on to the next slide here, which is a similar but different issue. Those same numbers, what I was just saying is when you start off, let's say you have a $50 risk amount. Boy, you make 4 R's, you make 3 R's, you make 1 R, you make 1 R, and boom, you blow it out of the water and lose 10 R's, right? That's a new trader when they start trading. Those are the numbers we just saw, and that's what I was just going over, right? So there's a new inexperienced trader who loses 50 bucks even though they had 4 out of 5 trades, right? So what happens when we get better? What happens when we get to be a quote unquote professional trader? Now we're going to risk $500, right? Does this look familiar to anybody? First trade we make 200, second trade we make 150, third trade we make 50, fourth trade we make 50, and the last trade we lose 500, and we still end up negative $50. Do you kind of get what happened there? In other words, when you're new, you completely blow your stop. You trade aggressively, maybe you trade pretty good, but you blow some stops, you do some mistakes. Here we get to be experienced, and we didn't blow our stop loss. We held to our risk limit of $500. But in order to hold to that risk limit, we're treating everything so cheap. We're treating everything take small profits and run, take small profits and run, take small profits and run. And you end up with the same exact account 2 years later. It's just you're doing it from a different point of view. Does that make sense also, everyone? By the way, don't laugh at this and don't think that's ridiculous. I bet you that half of you here listening to me are guilty of exactly this, if not more. This is the most common problem in trading right here. As a matter of fact, there's some guy, and well, I like the way he phrased it, William Eckert. I don't know who he is, but I was saying a similar quote, and somebody told me he said this and has it quoted somewhere. But one common adage that is completely wrong-headed is you can't go broke taking profits. That's precisely how many traders do go broke. While amateurs go broke by taking large losses, professionals go broke by taking small profits. Remember that. And what's really, I said this one here, you can't avoid understanding this because it's like a punch in the face. What's the problem on this one? What's the problem over here on this side? It's a big problem, by the way. As a matter of fact, what I'm pointing at right there is probably why most traders fail, even after they attempt some kind of an education. What's the problem on that side? Well, the problem is, yeah, I mean, somehow they're not managing their trades right. Either they're taking poor trades or they're not managing them, letting winners run. But the reason that it's an account killer, what I'm trying to get at is you don't notice this. See, over here, there's this punch in your face. You can't miss this. It's a glaring red spot on your record. But here, there's no punch in the face. You never violated your rule. As a matter of fact, you're saying to yourself, I have 4 out of 5 winners, right? I have 4 out of 5 winners. I just, I was a little chicken on the targets, but I'll get better next week. As a matter of fact, that takes me to my next slide. Does this sound familiar to anybody? The trader has taken some education, wherever, whenever, become what they would consider to be technically adept, meaning they know what they're doing on a chart. They have more winners than losers. They're able to consistently find plays that have decent moves, and trader feels good about trading, considers himself a success. But trader is break even at the end of the month, and trader is confident that next month will be better. The problem is every month comes down to next month will be better. Yeah, this is the typical stopping point for a lot of traders. And you don't have to speak up, but I'm sure many of you have been there and just got through it, or you're still there, where you're kind of lost because you're saying, I feel like I know charts and I'm getting winners, but I never make money. And initially it doesn't bother you because you're always in this attitude, well, I'll do better next month, I'll do better next month. And guess what? It just never gets better because you never identify what the actual problem is. And the problem is management. It's always management. We do a lot of things where, and I'm not even going down this road tonight because like I said, I have, even just hitting the highlights, I have way more than we can talk about tonight. But an important question for you. Trader is short, and this is actually a trade from me yesterday. Happened to be very appropriate to put in the slides here because it was exactly the point I wanted to make. You're short under 49.49, stop 49.80. So it's about a 30-cent stop. We drop down to here, about a 1 hour profit, and then a bar trades above the high of another bar, right? Question for you. You get out there. Is that a good exit? I'm going to give you time to answer this one because it's an important question. and central to the theme. If you're in the seminar program, don't answer this just yet. Give everyone else a chance because I kind of obviously touch on this in the seminar program a little bit. Is it a good exit? And there's only one, I rarely say this, but there's only one correct answer to this. Is it a good exit? You're short, you drop, you're up. And again, that's what I would consider to be a day's profits. You take out the high of a bar, you exit. The only correct answer to that is it depends. It depends. It depends. This ended up dropping a whole lot more. And for me, I took some profit, but I also took the rest of this profit way down here. And the reason is because this is the chart I was playing. So you can kind of see, we talk about what's the zip code for the target. Well, this is not super precise, but here's my zip code. Do you see that? So down here around 48 bucks is where I should have ended up. I got out of the last part of 48.02, which actually was a very nice trade. Oh, the numbers are down here even. The numbers are right down here. So it was a 4.4 hour trade. And by the way, you know how I did part of that? I did it by walking away. I left the screen for 20 minutes. It's probably, for me, that's my answer sometimes day trading, is to sometimes you walk away. I usually make more money walking away than sitting there. But what does it depend on? What do you mean, Paul? It depends on what? How could that be, we're managing, can't you define that as being a good exit or not? Well, it depends on all this stuff. It depends on what time frame are you playing. That could be one too. P.S. I didn't even list that on here, but I mean, it matters what time frame you're playing, right? Am I playing? See, if you go back to that chart, if I was, playing precisely to try and get the meat of a 30-cent drop, and there was some support area over here, and that was my goal, my plan, and that's what I wanted to do. And my time frame, if I hang in something for more than 7 minutes, that's incredible. Well, then that could have been a very good target if that's what I defined it as. But see, the problem is that we need to stick to what we define. Otherwise, you're winning trades, you end up taking smaller profits on. Your losing trades are still losers. You don't end up where you want to be. So it depends on the time frame that you're playing. The intended duration. Do you plan on holding the stock all day for 3 days till lunch or for 20 minutes? If you're expecting to hold it for 15 minutes and you get that kind of move, then yes, it is appropriate to exit because it's going to retrace on you and you don't want to sit through that. It depends on the target that you found on the chart. I kind of showed you where the chart target was. I was still my original stop, Ella. I had taken a third off the table, and then I still had the original stop. Yeah, I just walked away. The percent to target. In other words, one of the key things that I teach, and again, we're not going to get into these details, but I want you to think about this and put it in the back of your mind, is that your management technique should increase in preciseness incrementally as you get closer and closer to your targets. In other words, when you start off, you have no profit. To me, there's nothing to manage. If you get 90% of your way to your target, you have a lot of profit to protect, and you don't just blindly exit, but you change your management style in such a way that it allows you to still get to your target, but yet protect some of what you have. It's kind of common sense when you say it out loud, yet nobody does this. Very few people do this. At least very few people I've ever seen know how to do this and do it precisely. And this is, again, where even in my mind, when I was thinking about this last week, I'm thinking, well, everybody knows this. And I'm like, after talking to many, many people, I'm like, no, nobody knows this. It's kind of common sense to me. So that's another key thing is, where are you compared to your target? I gotta step back and tell you a funny story because this is long time ago, like in another world almost, when I was with the other company and we used to do these live, seminars and free presentations in a hotel room because there was no internet that would carry this. I was doing this and there were probably 20, 30 people in this room, and there's a guy up front, and I was actually talking about this similar topic way back then. And I started to say, I'm actually going to have a slide that's going to show us, but I started to say, well, what happens if you have a $1 target on something and you get 95 cents of the way there and it starts to back away? What do you do? And this guy up front just yells out, I take it. I go, okay, so I'm playing along. I go, what if you got 90 cents of the way there? What would you do? I'm trying to get some kind of intelligent management concept answer. You just say, I take it. And I go 80%. I take it. 50 cents. I take it. So it's, you know, and this is what happens to people is if your plan is such that to make your money for the day, for the week, for the month, whatever it is, whatever your time frame you're trading, if you need to hit this target more often than not or get most of that target for you to make your money, you can't just take 15 cents out of a $1 target and then walk away saying the famous line, well, missed money is better than lost money. Missed money better than lost money is perhaps the worst expression ever created in trading because the it gives traders the excuse, if you will, to take chicken profits. And we'll talk about why people do this so much. I think we are. Personality and style. Here's another one. And I have to admit something. As an instructor, I changed my mind on this a long time ago. And again, I'm almost getting embarrassed to say I've been doing this 20 years. About 18 years ago, I changed my mind. I used to say for management that there was a right way and a wrong way. And if you're not doing it the right way, get lost. You don't know what you're doing. While I still feel that way to some extent, you know what I've encountered? I've encountered the fact that there are people that have a personality that cannot change. There are people that, as a day trader, they couldn't hold something for 7 minutes if you tied their arms and legs to the chair. They'd find a way to exit the trade with their nose. And there are people that would never sell anything. Then it's moving up. Why would I ever sell it? So the personality at hand, I feel, has to be factored into the management equation. In other words, it's just like diets for people. I've used this example before. Um, if you go on a diet where you're not going to eat water and crackers for 3 days, well, if you can't do it, you're not going to do it, and you're not following anything. So follow something that you can actually follow. And the same thing is true with management, to set up ridiculous goals. And I know so many people that, teach or have been taught this concept when you take a trade, you must have a 3-to-1 target. And I ask people, okay, 3-to-1 target, you don't take the trade. And by the way, I think that's stupid. I agree, and nobody loves more than me having a spot on the chart where you have a high potential move compared to a fairly low, stop, if you want to call it. But to simply say that's required usually is silly because you ask people what is their Sharpe ratio, which is in effect your after the fact reward to risk. In other words, if I say I'm taking a 3-to-1 reward to risk trade, if I ask you, well, what did you end up taking at the end of the day? And they say, well, I didn't even get 1-to-1. And you find that to be true. Do you guys find that true in your trading? I mean, and some of you may not even know. You haven't typed in a while. You may not even know. But if you look and you studied it, do you find that you're taking trades that are theoretically 3-to-1, but at the end of the day, you end up and they're only coming out 1-to-1 because that's all you're taking from the trade. Does that make sense? Because that's obviously part of this whole problem. And that's where, matching up your management concept with your personality and style is critical. In other words, what this all amounts to is putting this all together in some kind of a format that you can trade, understand, reproduce when you need to, right? Your management should not depend on your current emotional state, your prior trades, whether you're up or down for the day, week, or month, the spur of the moment decisions, the fear of losing. By the way, this last one is exactly the one that is the problem and that drives all technical analysis, actually. It's the fear of losing that is the whole problem. It is slightly less of a problem for the average person to be long-term trading rather than day trading. Day trading involves more problems getting to targets. Why is that, everybody? If you've noticed that, first of all, tell me if you've noticed that yourself. If you day trade, is day trading more emotional to you? Is it more difficult to get to a target day trading? And if that is true for you, why do you think that is? I need a sip of water anyhow. And by the way, everything I discuss, whether, I like to both long-term trade, invest, and day trade. So everything I'm talking about, it doesn't matter what time frame. That's why I don't specify. But here I'm asking you for a specific difference. If you're long-term trading, investing versus day trading, do you notice a difference, and why would it exist? Openings are volatile. Well, okay. Openings are volatile, I suppose, but that actually could be a legitimate reason, Glenn, why to manage differently, because you have to manage the volatility. I only day trade and I try anything else. Okay. I get a couple other people typing. I'll let you get your comments out there. And self-doubts. Chart is moving. I made the mistake, stay in swimming. Okay. Well, here's the reason. And a lot of you know probably the comment where I'm going here is when we're day trading, I call myself and everyone who's day trading detach from the P&L, focus on the progress, the profile. That's the answer, correct, Alfred? That's the goal. The question is how do people do it, right? Yeah, the problem is it's not just making decisions quickly, PS. That's not really the answer. As a matter of fact, that kind of is a bad answer to be saying. I'll explain why shortly. But what I always say is that, when we start day trading, right at 9:30, an idiot comes in and takes over your keyboard. We all have our own personal idiots. And I think you all probably are smiling and understand what I mean. At the end of the day, have you ever had a trade and you look back at it and you say, I, I didn't do this trade. There's no way. You almost want to call your broker and say, I'm not sure what happened here. Somebody bought this stock here, and there's no way I did that. Well, this is what happens when you let just an unguided idiot during the day make the trading decisions, right? Unguided meaning there's no real firm plan of what you're doing, what you're looking for, or when you get into something, what you're supposed to do with it. And when you don't have that firm plan, the idiot steps in, and the idiot is run 100% by fear, right? We all want to avoid being a loser. That's our goal. That is, whether you like it or not, that is your primary goal in trading. And unfortunately, if you don't change that, what you will end up doing is you will constantly be trying to take small profits and constantly be quitting things with a small loss. And you'll end up with a whole book full of small profits and small loss and just kind of be in this break-even quandary forever, right? And the reason that happens is because if we're unguided, we don't want to go red once we turn green. So people take these quick profits on winning trades, and you think you did good because you made a third of an hour, a quarter of an hour on a trade, but it runs 5 hours, and that is supposed to be your week's salary that day, not just a fractional winner. Because if you keep doing that, there's no chance you'll ever make it, right? And unfortunately, many people end up in a trading style where they may not realize it, but they're actually trading to break even. That's actually their goal. They don't state that as their goal, but the way they're trading, there is no possible outcome other than to do that if they trade properly, right? Well, greed is a little bit less of a problem. Um, it's the fear that makes us make these management decisions for the most part. I mean, greed. Where greed, to me, the biggest spot where greed comes in is when you have a good trade and it backs off the high if you're long. You ever notice, everybody, that like if you have a really good trade and let's say you're up $800 or something, if it takes a little hit and you're up 600, true or false? It's very hard to sell that if you don't go out at the top. If you don't go, if you don't go out on a high note like George Costanza. True? Isn't that true? If you're up 800 and boom, it takes a little hit down to 600, it's very hard to manage it because you're like, I want to get back to 8. I want to get me back to 8 and I'll get out, right? And then what happens? It starts bleeding 5, 4, 3, 2, 1, and the more it bleeds, the more you're saying, no, 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 get me back. That's where the greed comes in, and it can be equally as bad. It's just that the fear comes in every trade because every trade you take, it turns green, and then what's your first reaction? What do traders do first thing? When can I get the stop up? When can I sell some of this? What's the market doing? Is the market starting to drop? I better get out of this. These are all the things we say to ourselves. Boy, am I way behind here. So many people come and they say, you know what, Paul, all this emotional stuff in trading, it's ridiculous. Just show me a chart, show me how to make money, and I'll do it. And of course, these people always turn out to be completely wrong. Always. Because it is not hard to learn to read a chart, as I said tonight, as I said in prior events. It's what you do with that knowledge where everybody goofs it up. See, here's the problem where it comes in. Psychology comes in to play with your ability to maintain an edge, often a lot more than you realize, right? You entry. Here's your first target. There it is. You defined it, right? And you're going to hit that first target, right? And you don't have any specific plan. You don't have any management style per se. You're just saying, that's my target. I'm going to get there, right? And of course, what happens is you come up a little bit short, right? And now you're saying, what do I do? And then all of a sudden you're way down to here. And you're like, what did I done? And what happens is it starts teaching you to not ever let that happen again. So what do? You start taking profits here, 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 and pretty soon you're barely green in the trade and you're thinking about where you can sell some. Does this ring a bell, everybody? Anybody? This is all on that same topic of either you're stuck in this quandary right now or you've been there in the past. Let me ask you a question that the answer may shock you. Is it acceptable to get 90% of your way to your target and to take a full loss? Is it acceptable, do you think, as a good trader, to get 90% of your way to your target and take a full loss? Is that acceptable? Is it acceptable to get 90% of the way to your target? I'll answer your question in a second there, Ella. Give me a couple more answers. Is it acceptable to get 90% of your way to your target and then end up taking a full loss on it? Well, for those of you saying, no, you can never do that, let me add this to it. What are you going to do to change that? In other words, you get 90% of the way there, you hit your target. You get 90% of the way there, it stalls, you hit your target. You get 90% of the way there, it stalls, and it starts to back up. What do? And what if, when you decide what it is you want to do, what if that decision ends up losing money for you? In other words, sure, you stopped that loser, right? And this is what people do incorrectly a lot, is that they focus on one trade and they say, boy, I never want that to happen again. And they take and they readjust their management so this never happens again. But because they changed their management, guess what? Can you predict what trade is going to do this? No, you can't. So it means you have to change your rules for every trade, correct? And what if changing your rules for every trade means that end result, you end up losing more money? In other words, you save this trade, great. You got half profit on this instead of a full loss. But 7 other trades that should have hit a full target, you took 3/4 profits. Do you understand what I'm saying? Right, exactly, Mark, right? Do you understand what I'm saying, everybody? So naturally, nobody wants to have a good trade turn out to be a loser, but there's something you can't avoid, and I call it falling through the cracks. Some trades have to fall through the cracks because whatever your management plan is, no matter how much you've perfected it, right? I don't care what it is, you could always come up a penny short of triggering whatever it is, and then it reverses on you. True? And you can't keep trying to avoid that one trade because now you're watering down all the rest of the trades. Does that make sense, everyone? So occasionally a trade has to fall through the cracks. And what you said is correct. You do find a way, and that's exactly what management is about. And that's what I call incremental management. As you get closer and closer to targets, you set up different policies and ways to do that. And it's part of what I teach in terms of this part of the management concept. But that is the general concept, very simply, is what you do. The question always comes up when and where and how. And how do you do it in a way that maximizes all of your trades, not avoids that one loser? Because that's what a lot of people do, is that they set up their policies to avoid that loser because that's what they don't want. And that's why you see these policies where every time the stock starts to move up, the stop goes up. I told you, 2, 3, 4 people, had this trade, right? Where they got out, and I swear to you, when you look at the chart, I'm like, I don't even know, I can't even tell you why they got out. I mean, it was the most perfect entry on the most perfect trade, and they're just out. Because in the middle of a bar, and I know what happened, is that, that's their entry point. They went green, and guess what happened? It just backed up a few cents. They went red, and they said, oh, I don't want to lose her, and they get out. In one case, the person lost an entire week's salary. As far as I'm concerned, it's a whole week's salary. You can't do that. And then to not be aware of it, you can't do that. Do you know the potential? So here's one thing I want to bring up to you, and some of you have maybe heard this even if you're not part of anything I teach, but a lot of this comes down to awareness. And one of the things that you should do if you've been day trading or swing trading, applies either way, long-term trading, whatever it is, one of the things that you need to do, and actually there's several things you need to do, but one of the basic ones is to answer this simple question, which is, how well are you managing? Do you know a great way to tell how well you're managing? You know a really good way to tell how well you're managing? This is the simplest answer and it's the best answer. You just won't believe it. And I got a funny story to go along with it too. The best way to tell how well you're managing is to answer this question. Well, it's probably true, Reg, since I say management is the most important part of your account. The best way you can tell how well you're managing is to compare your results to what if you didn't manage at all? What if you did no management whatsoever? That sounds silly, doesn't it? Doesn't it sound silly? Compared to no management whatsoever? That's insane, right? Anybody can manage better than walking away from the trade, right? What it would mean is, Ella, is that you would compare what you actually did to saying, here's my entry, here's my target, here's my stop. You do the Elvis. You get in the trade and just leave the building, and either it hits your full stop and you take a full loss, or it hits your full target, you take a full target. Want to hear something really shocking, everybody? I've been doing this a long time, and I have mentioned this exact test before, and well over 80%, I'm saying conservatively, it's actually closer to 90% of the people who actually check find out that they would have been better to not even manage the trade. Do some of you believe that? I know some of you will believe that because you've probably checked it or realized it just by looking at your records. Yeah. So you live in Florida and you install roofs for a living. It's 98 degrees out and your boss calls you. And your boss says, hey, I'll give you a choice today. You can stay at home, play video games in your air-conditioned living room, and I'll pay you double time because I have too many people today. Or you can come up and install the roof at regular time. And what do? You say, oh, let me come install that roof at regular pay. That's what it's like when you manage like that. If you're sitting there all day staring at a stock, managing it, and you're losing money because of your management, guess what? You can't get any more pathetic than that. Now, there are two times that people actually do better than the Elvis, in other words, just leaving it. One is because you already understand this and you have developed a system that beats what I call the all or nothing management system. And by the way, I'm not advocating that all or nothing is what you should use. What I'm saying to you is if you can't beat all or nothing, what the heck are you doing? And that's what I call it, is all or nothing. It means get in and walk away. You did your target, your stop, or at the end of the day, if it's a day trade, you have to sell it, whatever it is. What I would like you all to do, and I would really like you to send me these results, and it's not that I need to collect the results, it's that you need some kind of enforcement mechanism, and that would be, hey, I got to send this to Paul. Go back and look at your last 20 trades. If you're day trading, don't take more than 4 per day and randomly select them, like take every third trade going back 2 weeks or whatever you need to do. Collect 20 trades and do a simple thing. Just put the stock, the profit you made, and then recalculate the profit had you not managed it at all. Okay? There are like a dozen tests like this that you can do that I teach people, and this is one of the more basic ones. And what it does is, while you're looking this over, a lot of you are going to get a punch in the stomach that's going to make you sick, because as you do this, you're going to be looking and saying, oh my gosh, I never realized that stock, it took out the prior day's high, and I actually stopped out on it for a small stop. And this one did this, and this did this, and oh my gosh, I didn't even know this, right? It's an extremely important thing. And the real secret to trading, folks, at some point is this kind of analysis. You can only learn so much generically, strategies, entries, target stops, management, and then a lot of it becomes how do you apply it? And this is why trading is not universal, because we all have our individual preferences. Some of you like taking breakouts, some of you like taking pullbacks, some of you like a 1 minute chart, some of you like a 15-minute chart, some of you only take a daily chart or a weekly chart. Some of you don't mind taking a really snug stop and trying it 2 or 3 times and get a home run, and you take the home run. Some of you would rather just get with a really wide stop and just make a little money and never stop out, right? You're all different. We're all different. And it permeates for everything we do, including our management. So there is no one size fit all anything. And that's why in the second class, what I talk so much about is that I'm not giving you rules you have to follow. I'm giving you an incredible set of tools which you have to then custom fit to what you do. And they are the tools that make you money. They are the tools that take the standard stuff that you see in any Mickey Mouse technical analysis class and convert them to things that really help you make money. Think about this statement. Is this true or false? If you're in a trade and you eventually hit your target, any management you do costs you money. True? Kind of scary, isn't it? You're good at reading charts. You get a good entry. You see a target. Trade hits the target. And you make a fourth of the money you should have made. Why? Well, because you got nervous. By the way, don't think for a minute I'm advocating you never manage anything. Obviously, it's appropriate. It's just that most people are so bad at it that they never have a chance of making money. They cap their wins incredibly tight. Kind of almost the reverse of what you're supposed to do. When do most of you stop out of a trade? In other words, you enter a trade. I'm speaking, do you stop out fairly quickly after you enter it, or is it much later in the day or several days later if you're swing trading? Do you generally stop out fairly quick, like, ooh, I kind of got in too early and oops, or is it much later? For everybody, it's quickly, right? Is that not something you can use to your advantage? If you know that 80% of your stop outs happened within 2 bars of your entry, yes or no? Can't you use that to your advantage? Just thinking on your own. Can't you just use that to your advantage? Is that something you even know? Do you even know that stat? See, this is the stuff where you have to improve on. This is why it scares me to see people who don't even take a cursory glance at their trade afterwards. You should be really looking at these to improve everything that you do. Wait 2 more bars for me. Well, there's a lot of things you can do if your issue is always stopping out shortly after you get in, and that's part of the whole management process that I can't even begin to touch on tonight. But just think about it. There's things you can do if you know that's a fact, and for 90% of the people, it is a fact. I don't have time to tell you this quick story because I don't often do this management thing like I'm doing tonight. What I just asked you to do that all or nothing test. By the way, let me do this. How many of you are going to do that and send it to me? How many of you are going to do the all or nothing management? Take 20 trades, recalculate your profits. How many of you are going to do that? Give me one on the screen. I put you in a tough spot now, didn't I? Because now either you're saying, well, I'm a great trader and I don't need this, or I need it but I'm too lazy to do it, or okay, I'll accommodate Paul and say I'm going to do it even though I'm not going to do it. Who's going to do it? The more I get you to commit, the more likely you're going to do it. That's all I'm trying to do. 2 people. Out of 80 people, 2 of you are going to take this test. All right. I guess you're all fantastic traders that don't need the help. Believe me, this is one of the most important things you can do. Yeah, it's going to take you 30 minutes of work. Maybe an hour. It may take you an hour of work. I'm not sure. When I asked a while back, quite a long time ago, I asked the same thing, and somebody sent me their results. And by the way, I always ask you to title it, I was shocked and amazed. At the header of the email, title the email, I was shocked and amazed, because that's what you will be, 90% chance. I got an email back from somebody, I was shocked and amazed. He wrote a 2-page email, and he attached multiple spreadsheets. And it starts off, Paul, I did the last 20 trades like you said. I was so shocked and amazed, I redid the whole last month. Okay. Bottom line is that he had lost about $3,000 the last month. He would have made $12,000 had he done all or nothing. No joke. He sent me all his sheets, all his stats. That's a little bit of a swing, folks. And you know what's really scary? This guy who was -3 and would have been 12 had he done all or nothing. And when I tell you this, I saved this email for a long time and I lost it somewhere along the way and switching around, whatever. I'm about to tell you this, but I'm going to ask you to do me a favor. Before I tell you this, ask any small children to leave the room. Ask any pets to leave the room. Clear the desk of any coffee or drinks or alcoholic beverages. Move your keyboard away from you a little bit, okay? Because I'm not sure what's going to happen when I tell you this. This is absolutely true. He writes me this whole email, 3,000 versus 12,000. Thank you so much. This is incredible. He puts a PS at the end of the email. The PS said, I shouldn't have been all that surprised because the last time you asked me to do this, I got similar results. I'm not joking with you. This is where you're supposed to go, OMG, LOL, you're kidding me, you got to be lying, you can't be serious. Well, the point is that people are so damaged that he knew this was true. He did it once, and yet a couple, 3 months later, he went back to what he was doing and didn't even realize it. That's the point, is that people get so damaged that even when he knew what was wrong, he went back to doing the old thing again, right? I don't, he was somebody like if, that I didn't know. He wasn't part of any program. He was just, a random, just like many of you are here. You don't subscribe to anything here. You're just here for these events, and that's all he was. So I never heard from him again. But it's just amazing. I mean, how can you say that? It's amazing. Question for you: if you're day trading, what do you do after you enter a trade? You'll say you take a trade on a 15-minute chart and you intend on holding it for 4 hours, right? 15-minute chart. Take a 5-minute chart. You're on a 5-minute chart. Let me type this. You're on a 5-minute chart. You plan on holding something for a couple hours. You get in the trade. What do most people do? What do you do after you're in the trade? What do you do? Pray. That's a good answer. That's what a lot of people do. Stare at it, right? Stare at it. Now, I understand staring at it if you're scalping. If you're on a tick chart, if you're on a 1-minute chart, I understand that, right? But what in the world are you looking at? You entered your trade and you set your stop, let's say, right? What are you doing now? You know what people are doing when it turns green? They're looking at the market, for example, to say, oh, you know what? The market's starting to tank. I better get out of this trade and take the money that I have before the market tanks, right? True? You ever done that before? And of course, the market's not tanking. The market's put in one red bar in a 1-minute chart in the middle of a huge uptrend, but you say it's tanking because why? Your idiot wants an excuse to get out of the trade, and that's what you do. When you get in a trade, you know what you should do? You should go look for the next trade if that's appropriate for you. You should go watch TV. You should do your taxes. You should research on the internet. You should go for a walk. What good can you do standing there, sitting there, if your stop's in place and you plan on holding the trade for 2 hours? I mean, for most management, for most people on a 5-minute chart, there's nothing that could possibly set up that would allow you to manage anything for at least 20 minutes, correct? Even on a 5-minute chart, you can't possibly tell me something's going to happen inside of 20 minutes that would allow you to change what you're doing other than stopping out of the trade. Is that true, everybody? There could be an exception out there. I mean, you could have a legitimate plan where maybe that's not true. But for 99% of you, I don't see how you could actually manage a 5-minute chart in less than 20 minutes other than just stopping out of the trade. True? So what are you looking at? Why are you sitting there staring at it? You are just fueling that idiot inside of you. Remember, management is so subjective, it's incredible. And if you're going to fuel that idiot, you're never going to put him to sleep, so to speak, right? And again, a lot of these things I talk a lot more about when we're actually, I'm just trying to open your eyes to some of this stuff, right? Here's boy, I actually put these slides together in perfect order. I didn't realize I did a lot of slides here, I didn't realize they're in such perfect order, right? Here's a big psychological thing for a lot of times, and don't even type on the screen for this one, just think to yourself, was the problem at the end of the trade that you had no idea how to get to the target? Or you knew how to get there, but you just didn't do it? See, for most people, it's not the secret management system. I could type on the screen 6 different management systems, all of which would probably make you more money in what you're doing. But the problem isn't you need the management knowledge. It's that even if you have it, you're not going to follow it, right? It's the same thing with all of trading in general. You need the confidence, which comes from successful trading at lower risk levels initially, to know what you're doing, to be able to say, hey, this is how I manage the trade, period. When you are managing, you should be calm and collect as possible. Why? And I mean, what is the structural reason that you should be extremely calm? I don't think anybody's going to get this because I don't know how to phrase this properly. Actually, yeah. Why is it the case that you should be perfectly calm when managing? And I don't mean because that's what you need to do to make money. I mean, what is it about the circumstance of money, when you think about it, that makes it the case? I could see being nervous, getting ready for the day, before the trade, because there's a ton of variables that are hard to define. Even the best trading plan no matter how good it is, there's some subjectivity that's left up to the spur of the moment. You can't avoid that. But what I'm trying to get to is, right, Eric, exactly. You do have it, exactly. Because you really literally should have nothing to think about when you're managing. In other words, management is easily predefined. I understand trading strategies are hard to define. They are. They're for me, they're for anybody. There's some subjectivity. You try and get them as objective as possible. You try as hard as you can to pinpoint exactly what the setup looks like, what your entry is. And that's what we're always struggling to do at the end of the day. Say, okay, I stretched too far on that one. It wasn't quite what I wanted. It's tough. But for management, it's simple. It's a piece of cake. I could write you 4 management plans right now in 1 minute that would cover 100% of what could ever happen. As a matter of fact, I just taught you one. I just taught you a management plan that is absolute, that a 5-year-old kid could follow, and it takes up 1 line on a piece of paper. Enter your trade, set the stop, set the target, and walk away. There's a management plan, right? What if you start to build on that? What if you say, well, when I get halfway to my target, maybe I'll do something. What's that thing you're going to do? Well, I don't know. Pull up pivots, pull up moving averages, pull up some ideas. But my point is that when you're done, your management plan is so clean and objective, you, the idiot, during the trading day, you have really nothing to think about. You don't get to make the decision, right? Do you follow what I'm saying? But yet, how many of you are like that? How many of you are that calm when you're managing because you're saying, hey, I don't have a choice anymore. This is what I do, and if I want to change this, I got to wait till tomorrow to change it. Does that make sense, everybody? By the way, this is what tonight is all about. I hope you like tonight what I'm doing. We're almost done, by the way. I hope you like this because this is what it's about. I'm not even attempting to give you the answers. I'm attempting to give you all the questions, which to me is the most important thing that there is. It doesn't specify how to pick your target and stop, I'm sure. It does not specify how to pick your target and stop. I'm not sure it's a good plan. Well, I'm not sure I follow that, Ella. I'm saying, yes, your strategy, whatever you're doing, the plan for the strategy you're doing, yes, it has to identify how you get in, what your stop's going to be, what your target area is. But I'm just saying, that's. Oh, you're saying, why am I saying that's something you have to think about? Because those things are hard to define. That's why, Ella. In real life, they're hard to define, even for me. And we can define them all we want to, but there still comes down to the point, here's a pullback. Are we in the right area? What are my guidelines for how far to pull back? What's my guideline for an entry? Is that bar big enough? Is that tail big enough? Whatever it is you're using, it's some subjectivity involved. So I'm just saying that, yes, we need a plan. My point is that management, the plan, is much more clear, concise, and simple, right? Oh, absolutely. It all needs to be part of your plan. I'm the biggest guy there is on trading plans and stuff. And as a matter of fact, I think I think you're Yella, I think you said you're signing up. You'll see there's a whole on the resources page for the seminar people. There's a whole video about trading plans and following up on trades and that kind of stuff in addition to the classes. I'm huge on it. My point just simply is that there's absolutely no excuse for management. There's no way you should be sitting there during the trading day saying, okay, it just rallied 20 cents. What should I do? There's no what should I do. The only thing you should be thinking about is just your idiot person should just be deciding, well, is that a pivot? Is that the thing I need to start making my management changes? Or am I, whatever is defined, close enough to the target to alter what I'm doing? That's all you should be doing. And that you theoretically could turn your management over to a non-trader. You could get up from your desk and say to your neighbor, here, I know you don't even know what a chart is, but here's my management plan, follow it, and they could follow it because it doesn't involve complex things. That's my point. All right, a couple more slides. We're almost over here. Well, I kind of mentioned this to you too. Look at your records. How many of your trades end up being multiple hour trades? That's another big test for you, by the way. If you're risking $300, just take a scan down your P&L column. How many trades are over 600? And again, I'm not trying to pick a number that you have to be. It depends on your batting average Sharpe ratio. You can make a ton of money with $300 winners if your batting average is 60, 70%, whatever it is. But I just mean, if you're not making money, if you're struggling and you're batting 50%, you got to have some bigger winners thrown in there. And if you never get much over a 1 hour winner, you're never going to have a concept where you can end up winning. True, false. Tight stops are a conservative way to trade or invest. Give me a quick answer. We got to wrap this up here. I'm over. I knew I'd be over today, but tight stops are a conservative way to trade or invest. This answer could have two answers because it could depend on how you share size. If you do random share sizing, which I think is a very bad thing to do, it could give you a different answer here. But if you are share sizing such that every trade that you lose is a full loss, whatever you're risking, tight stops just mean much more frequent stopouts, right? Much more frequent stopouts. So it's not conservative. It's an extremely aggressive thing to do, is to say, I'm going to risk $500 and I'm going to use a 10-cent stop instead of a 30-cent stop. Well, it means you're going to stop out 3 times more often. It should mean that you make 3 times the money, but you got to be awfully good, awfully accurate. It's very aggressive. That's the right word, yes. But it's not conservative. It's the opposite of conservative. Because all the time I hear from people, well, that's a kind of a risky trade to me. I'm going to use a tight stop. What does that mean? That's backwards. You're not sure about the trade, but you're going to take it. You don't use a tight stop. You use an extremely wide stop. You go the other way. But anyways, a small point. Management is the battle of the biggest fear, which is the fear of being a loser. Confidence and a well-laid plan are the defenses to that fear. Another little blurb. Why it's easy to have a management trading plan. I did that as well also. And one last concept here. Sorry I'm running over. I just knew I would. And I left out half the stuff tonight. There was so much to go over. I couldn't even do it. I want to go over this thing too. Here's your trade, right? You get in a trade here, whatever your strategy, whatever you're doing, you get in this green bar. Let's say you get in over that red bar, right? So there's your entry, boom, you're in the trade, okay? You start to move up, right? You're green, you're up 1/10 of an hour, you turn red, you go green again, and you say, oh, you know what? That stop right there happens to be break even for me. I'm going to get my stop to there, which a lot of people like to do. You should not use break even as a concept, but people do. And they stop out by 10 cents. And then it goes to their target, right? My point of this is this. You ended up breaking even, so you're proud of yourself, right? But you could have made $1,500 on the move. Is that a loss or not? It's a real question for you guys. Last question of the night. Because I have a view on this which is very different from what even people who teach this stuff would teach. A lot of my stuff is different because a lot of stuff that you hear is like entry-level Mickey Mouse stuff that's not really true for making money. Is that a loss or not? You broke even in the books. But the trade could have made $1,500. Is that a loss or not? Give me some answers. It's the last question of the night. And this may be more my opinion than a correct answer or not, but yeah, I look at it very much as a loss. And you're right, it's an opportunity loss, right? And there's this thing that's taught that's called missed money is better than lost money, right? And I don't believe in that, to be honest with you. And the people who say that say, well, you know what, when you're new, it's always better to skip a trade than to take it. Well, here's something I really believe in a lot. You shouldn't be trained any differently when you're new than when you're experienced, right? If you're getting this training, wherever you're getting it, and you're being trained as a new person, right? When does somebody come up and tap you on the shoulder and say, hey, you're not a new person anymore, let's retrain you? That's not the way it should be, right? You step up to the plate, I believe, what I trade people is your trade as a professional trader on day one. What's the one thing, what's the one safety net that we do that protects a new person? You don't say to the new person, well, we're going to manage differently. You don't say to the new person, we're going to use bar by bar management because that's safer. Don't say to the new person, get your stop to break even. We don't say to the new person, missed money is better than lost money. We say, you go out there and you trade. I almost let something slip. You trade your butt off like a professional trader, but here's what we're going to do. Now, everybody uses stop sell. You're going to risk an extremely small amount of money when you start. As a matter of fact, you're going to risk nothing for a little bit of time. And then you're going to risk a very small amount of money so that you don't even care if you lose. And you know what? You're never going to advance unless you make money. Because that way you're taught exactly the right way to trade from day one. And yet if you are new and stupid and not getting it, you're losing nothing. And yet you're learning. And then as you get it right, you increase your share size, you're already trained how to trade. You don't have to stop and redo stuff. To me, this is a loss. When you're a professional trader and you find a setup that you love, and it is the trade that's going to make your week or make your day or whatever it is, and you just decide to let that go, that's not acceptable either. As a matter of fact, you could make the argument that to take this and stop is a $500 loss. To take it and to not take a winner is a $1,500 loss. That's the way I look at it. Now, naturally, it presumes you know what you're doing. It presumes that you have a good plan and you know what a trade is that you're supposed to be taking. But to me, it's not acceptable to pass a good trade. Note that if you took a half loss on a 2-to-1 trade, your reward to risk was 5 times when you exited. Yeah, true. Um, yeah, Jay, that incremental reward to risk thing is tricky. You can't take it too far, as I'm sure you know since you said that. Um, but I mentioned that. I just mentioned that yesterday. Yesterday, I don't even know what the situation was. Um, but I said, oh, I was in a situation where I did properly raise my stop, and I was going to walk away for the day. And I had I even know what stock it was. It was a short and the gap in the afternoon. But I had a quarter of an hour wrist. That was today. And because, the stop was up, and yet the target was going to be 3 hours. So I had a 12-to-1 ratio, if you will, is kind of what you're saying. You got to be careful with that, Jay, a little bit because, you know, as you get closer and closer to your target, there comes a point where it doesn't really make sense to start saying, well, my target, I'm so close, I'm getting 3/4 of the way to my target, therefore my new reward to risk based on my target versus where my stop is right now is like 0.25. It makes no sense, right? So you got to be careful not taking that too far. But I understand what you're saying. Yeah, it is something to look at for sure. Absolutely. Questions, folks? We got to wrap it up here. This is the latest I've ever run. I knew I would, and I flew through some stuff. Was this helpful to some of you? Again, this is not a class on management. Obviously, that's an all-day process as part of the program I do, and I'm not trying to talk you into getting there. I'm just letting you know that this is, for many people, at a good spot in your career. One of the most important things you'll ever encounter. And I just know because I've worked with people for a long time now. And this is where people get stuck. You get in this area, and the problem is they don't realize it. They start saying, oh, I need a different strategy. I got to refine this, refine that. And when you look at what they're doing, they may be taking pretty good trades, but they're not getting anything out of them, right? So that was it. I was hoping, if nothing else, to at least have you asking tons of questions. Thanks, guys. All right. If you're in the room, I'll see you tomorrow. Otherwise, I'll see you guys on Monday for the next free thing. Have a great evening.